Good evening, ladies and gentlemen. This is Greg Michalowski. This is Monday, March 29, 2010, New York evening, Far East opening Forex report. Let me remind everybody that trading Forex is risky and should only be done with risk capital, not change your lifestyle. Traders could lose all of their risk capital trading Forex. FXDD doesn't guarantee any recommendations made within this commentary. Traders should make market assessments, take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage, which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXDD doesn't guarantee the accuracy of the information. While we did see the euro dollar move back and forth here today, especially during the New York session, most of the action occurred in the Tokyo, or not Tokyo, well, Tokyo and London session. The market initially gapped higher, then moved lower, and then moved higher during the Tokyo session, coming up and testing the 200-hour moving average. The market held that 200-hour moving average and then came down to where we had support at the 134.37. What's the significance of 134.37? If you go to the daily chart and you take a look at the lows from end of March, beginning of or end of April, February, beginning of March, this low is 134.37. This low is 134.51. This low is 134.44. 37 to 51 level has always been a key support level. Each of the time the market went down, the market quickly rebounded and rebounded all the way up to the 50% retracement, went up 138.17. Now the market is back above after correcting over the last 2 days higher, back above that 134.37 level, and you can see that in the hourly chart here today. In particular, the market held this level during the New York session. In fact, the entire New York session, you had to go all the way back to this point right here when the market was last below the 37 level. So for most of the London session and New York session, the market had been staying above the 37 level. It's currently trading at 134 around the 80 level, which is around the 38.2% retracement. It comes in at 77 of the last move down from the high that we saw on March 17th to the low. That 38.2 again comes in at 134.77. In addition, we have the 134.82 level. What's the significance of 134.82? It is equal to 61.8% retracement of the move up from the 2009 low right here at 124.56 to the 2009 high at 151.44. If you come down 61.8%, that comes in at 134.82. The market moved below that level on a number of different occasions here over the last few months, and in particular over the last three days, the market had moved below it, but we're quickly moving back toward that level after the rejection of the new lows that the market had made, or at least we're getting the correction of that move currently at 38.2% of that move. So I wouldn't necessarily say it's all over, but there is resistance right here. We also have resistance against the 200-hour moving average comes in at 134.94. So we're really in a point where the market's going to have to make a decision whether they want to go higher from this breaking the 200 and move up to that 135.42, or do we eventually want to break this 37 level and head down toward this 100-hour moving average once again, and then make up our mind what do we want to do from there. So those are the two decisions, and we'll make up our mind around the 84 or the 82 to 94 type region here, either tonight or we're going to break through the 37 level at some point or another. Taking a look at the sterling versus the US dollar. We're looking at the hourly chart, and we're right in between the two goalposts. The goalpost is defined by the 200-hour moving average. That 200-hour moving average currently comes in at 150.35. That'll be a topside resistance long in the intermediate term. On the downside, we're at 149.22. That's the 100-hour moving average. Currently, the price trading at 149.82. We're kind of right in between those two different extremes, so we don't really have a lot to go on from that perspective from the sterling versus U.S. dollar. But what we do have, if you take a look at this hourly chart, is that for most of the day, I'm going to put a line in here, right across here at the 149.81 level where the current price is, and you can see that despite only this bar was able to close above this 149.82 level. All the other bars below, even though we got above it each time. So it's becoming a key price here today, and so we're right at that level. And look, it also corresponds to this high going back here. Oops, I didn't even see that, but that was the last high. Other than today's high, when this high spiked up, checked the 100-hour moving average at this high was as a remembered price. So key level here, right as we speak, for the sterling versus U.S. dollar. We'll see if we can move above that level. Taking a look at the 5-minute chart, we are just above the 100-bar moving average, which comes in at 149.75. The 200-bar comes in at 149.68. So this is kind of starting to converge, and you can see how the market is starting to converge here, or had a very consolidated phase here. So the market is getting ready for some sort of move. Are we going to move above the 82, 80, 81 level, or are we going to move below this 200-bar moving average on the 5-minute chart and head to the downside? Those are our trades, I think, and that's what you got to focus on here tonight in the sterling versus the U.S. dollar. In the dollar versus Swiss, we've had a choppy sessions. Market started off way down and then moved back higher, lower, and spend most of the time in between the 200 and the 100 bar moving average. Again, that's in between our goalposts here. We haven't had a close below that 200 bar moving average, going back all the way back to this period right here. So we do have support at the 160.25, 106.25, currently trading at 24. We are at support level, and on the top side is 106.68. So like the other currency pairs, we do have a choice here. Okay, we're getting close to breaking this level and trying to move down, perhaps to this 105.99 level in the currency pair, 105.82. Support from down here. and that currency pair and going back to these levels right here. So we're going to have to see some momentum to the downside. Right now, it's just kind of hanging there, which is not all that encouraging, because the longer the market hangs, and you can see it here in the 5-minute chart, the more frustrated it gets. But we are below the 100 and 200 bar moving average in the 5-minute chart. Both of those are converging here, which suggests that the market should be getting ready for a move. Perhaps we see a little retracement back up to the 100 and the 200, and then a move to the downside. I don't know. But right now the bias is definitely to the is to the downside, being below the 100 and 200 bar moving average on that chart. Taking a look at the dollar versus yen. Still consolidating in a very narrow range here today. You can see it in the 5-minute chart. Just lots of up and down, up and down, up and down. The 200 and 100 bar moving average I've crossed on a number of different occasions here with the price, suggesting that the market is still in equilibrium, still in a non-trending type mode. But what I will say is that the market failed on the last attempt at the upside here. We were looking to get through the 72 to 79 range on the upside here in the dollar versus yen to confirm the move above the 100 bar moving average, and we couldn't get above the 72, couldn't get near the 72. It got only to like the 68 in the market, then started to move down. And right now it looks like the opposite, where the market is now using the 100 bar moving averages as a resistance level, and we have this 38 to 41 level, which I'm going to be watching on the downside. Get through that level, then we should see further selling to the downside. But right now we're kind of still in between these ranges. The longer the market on trends, a better chance that we do have a trend. So be aware, if we break below this 38 level, I think we go lower. If we break above this 70 to 78 level, I think we go higher. And in the middle here, look for bias to the upside or bias to the downside, depending upon which side you are on. The Aussie versus U.S. dollar is the final currency pair I'll take a look at. We moved above the 100-day moving average after closing 1 day below the 100-day moving average on Friday. That 100-bar moving average comes in, 100-day moving average comes in at 90.68. You can see the strength of the upside that we saw here in the Aussie versus the U.S. dollar. That was on the back of some comments by our RBA Stevens. Tonight we do have other comments from the Deputy RBA Governor, and so we will be looking for some movement, perhaps maybe confirmation of what they said yesterday. But I would be warned that we do have good resistance up here at the 94 level, and a lot of times, we've already heard the news about them talking about higher rates, and we've gone already a great distance. We do have a good resistance at this 94 level, so watch this level closely. If the market gets up there, I'd expect sellers against that level with a move back down. But watch the 200-bar moving average equally as well in the 91.45, and also the 100-bar moving average down at the 91.10 or 15 type level. Those levels should provide support on the downside for the Aussie versus U.S. dollar. That's my evening report. Wishing everybody good luck into trading. And we do have industrial production coming out of Japan here tonight. We also have employment coming out of Japan at 7:30 and 7:50 respectively. And again, our RBA Assistant Governor DeBell speaks at 6:10 tomorrow on board. We do have GDP out of the UK at 4:30. Nationwide home price index at 2 a.m. for the UK. Also, we have the U.S. We have S&P composite index for home prices out at 9 o'clock, and the Conference Board consumer confidence coming out at 10 o'clock. That's my report. Wishing everybody good luck. Bye bye now.